Hey guys, thank you very much for tuning to the third part of the 5-part video series on how to become profitable within the foreign exchange market. So the first video we went to what is Forex, second video we talked about when to trade Forex, and the third video we thought we'd talk about buying and selling. Now we just thought we'd get a little bit technical, but we're just going to keep it super simple for everyone watching this. So before I kind of go into it, I just talked about the different candles or the different ways we look at the market. Now for this case example, each candle represents 1 hour. But looking at the chart, you can have a 1 minute candle, you can have a 5 minutes, 15 minutes, hour, 4 hours, 1 day, even a month, even a week. But for this case example, we just want to keep it super simple, 1 hour. And what this represents is a buy candle. So let's say we look at a currency pair, so Anish did a great job. The common pairs, we looked at British pound sterling versus USD, US dollar. And the pound sterling will represent the buy. So a trend we'll look up will just be like that. Simple as that. And if we look at the candles at a really simplistic point of view, if we just highlight that part, and please forgive us our drawings, we're not art majors at all, but if we look at this is the body of the candle. And this represents how, the strength of the candle and strength of the markets. This part here, or this part here, represents a wick. So this represents how quickly the markets change. What Anish will really explain about is the sales part or the sell part of the candle.
Okay, so as Shreyas explained, we have the buy side, which is the GBP. In this example, there's multiple pairs you can use, guys, but in this example, the buy side is the GBP. So let's say that the sell side is the USD. Exactly the same. We've got a 1 hour candle, and we've got our body, and we've got our wick. Usually when you see big wicks, guys, this usually means like the market tried to reach these areas, but it couldn't. Price couldn't stay there, and price couldn't stay here. So it's moved back into this body. So if we talk about, so we mentioned the uptrend, and we've mentioned that that's an up movement, right? So price moves up. It might move down first, but the overall trend of that price will be an uptrend. So in the same way, we also have downtrends, down movements. So all this is doing is the market is just shifting down and down. And when you have really strong uptrends, guys, and really strong buy trends, that's when you want to get into the market, and that's when you want to look at, okay, when's the best place I can get in? Because these markets will not continuously keep moving up and down. They have their fluctuations. So you might have an uptrend for a while, and then you move into a downtrend. So all this will be is, let's say it's that. So we have an uptrend, and then prices reverse at this area and gone back into a downtrend. And all we want you to get your heads around, guys, this isn't a very hard concept. All it is buying, the price moves up, and in selling, the price moves down in the markets. And I hope this has been informative. I hope you realize the difference between buying and selling in the markets and when you can get into these trades. So guys, like we said before, we really appreciate your time in coming on this third part of the video series of buying and selling. So the next part we'll talk about lot sizes and pips and why this is important in terms of risk management. And if you guys remember, so in part 3 of the video series, we talked about a masterclass, a live one that will be at the end. And we'll actually discuss the trading strategies we've been using over the past 3 to 6 months to become profitable. Thank you again, and if you have any comments in the meantime, please leave them in the comment section below.